a day pro trader, explains the oversold CCI indicator. A day pro trader explains the oversold CCI indicator. Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis. Guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TS CCI Pro traders, and our website is www.dayprotraders.com. The title of the video is A Day Pro Trader Explains the Oversold CCI Indicator. Let's get started. We are looking at a MAT stock, Apply Material Incorporation, a stock that is listed on the Nasdaq 100, okay? And we have seen here that the commodity channel index, or the CCI indicator, is below the level of negative 100, minus 100. It is oversold, all right? And we want to discuss, okay, and explain to traders how one can trade the oversold CCI indicator. First thing first, what is the oversold CCI? The commodity channel index is comparing the price to a specific moving average. Because we are using the CCI period 14, the CCI period 14 is comparing this MAT stock to its moving average period 14. So the green line that we have on the chart here is the moving average 14. So the CCI period 14 is comparing the price to the moving average 14, okay? If the CCI period 14 is oversold, it's also telling us that the price is at the lower bound of the Bollinger Band period 14 with a deviation 2. Okay? So if I place on my chart now, the Bollinger Band period 14, volatility 2, when the CCI period 14 is oversold, very often, not always, very often, the price will be on or near the lower bound of the Bollinger Band 14, volatility 2. All right, so we want to clarify first what is the oversold CCI, what is the oversold commodity, okay, channel index. All right, it makes sense? All right, so the CCI is oversold, which is below the level of negative 100. What are the next steps to validate, okay, this trading setup? So for traders that are using the TS CCI Pro, all right, when we see that the CCI is oversold, it's a trading setup. It is not yet the trading signal, all right? We must now validate, okay, the oversold CCI. The next question, how do we validate the oversold CCI? Because I am on the daily chart for a MAT stock, and I see that the CCI is oversold, which is a bullish trade setup. I must now validate this bullish trade setup. Okay? So what do we need to do is to go to the higher time frame. So when we see, okay, the trading setup on the daily chart, we can go to a higher time frame like weekly chart, monthly chart, quarterly chart, yearly chart to validate the trading setup, okay? If we are, for instance, on the hourly chart, we can validate our trading setup on the 4-hour chart, on the daily chart, even on the weekly chart, okay? If, for instance, we are on the 50-minute chart and we see that the CCI is oversold, we can validate our trading setup, okay, on the hourly chart, 2-hour chart, even on the 4-hour chart, okay? So when we see the oversold CCI trading setup, when we identify an oversold CCI trade setup, we must go to higher time frame to validate the trade setup. So how do we do that on the daily chart? So we on the daily chart, we see the oversold CCI. We go to the weekly chart, okay? Pay attention carefully. Now, the common trading mistake is to see or to identify a trading setup and to go straight away and place a trade. It's wrong, all right? There are too much risk if you do that, okay? You want to, okay, analyze the risk, assess the risk before, okay, waiting for a signal and selecting, okay, a low risk entry point, all right? So we are now on the weekly chart. We are looking at the price itself, the number one indicator. So we can see that on the weekly chart, the CCI is still oversold. It's on or near the level of a negative 100, still oversold, okay? So when we are talking about sold, it's a bullish trade setup. When we are talking about bullish trade setup, we are talking about support levels. Oversold is also means that the price is at a valid support level. So by going to the higher time frame, we want to ascertain that truly we have a reliable support level, okay? So here I placed on my chart already the Fibonacci retracement level. You can see that the price Amata stock went up from 2013 from this point. Here where I placed my green spot and went up all the way to this level here. This is a bullish progression, okay? But right now, it's going down, okay, on a weekly chart, okay? But the price now at a 78% Fibonacci retracement level. So for traders or investors, when a stock, okay, rally up and then pull back to 78% Fibonacci retracement level is considered as oversold, talking about the Fibonacci level of 78% Fibonacci retracement level. So technically speaking, okay, it is oversold. But now it's one thing to say that it's technically oversold, but now we need to verify that truly is oversold and wait for a signal before we select a low risk entry point, okay? So far, all we are doing is to validate this trading setup. So we are also at a key level, a Fibonacci key level, which is 78% Fibonacci retracement level. I'm going to put a line there, okay? And I will color it now into pink, all right? Right there, that's the line that I draw there. We want to look at the price itself. Is the price at a key level on the weekly chart? Yes, it is, okay? Can you see it? So you can see that the price found a resistance, follow my cursor here, found a resistance here, again here, again here, again here, and now we are at that level. So it's a key level on the weekly chart. So it is oversold and it's at a key level. So it's not too bad. If it was oversold, but it is not at a key level, we will say that there are more risk in this trading setup. We may decide not to trade it, or we may decide to wait. Or if we decide to trade it, we will be very careful and control, okay, the risk, okay? So now on the weekly chart, it's not too bad, so to speak. So we go now to the higher time frame, monthly chart. Again, anytime you change time frame, pay attention to, okay, the price itself, okay? The CCI is oversold, you can see here on the monthly chart. It is still below the level of minus 100. But we want to ascertain that this is a key level also on a monthly chart. Yes, it is. You see here that we have a bullish progression and the price went down 1, 2, 3. See, on the pink line. So it's a key level. Price change direction here. Price found the support here along the green line, along the pink line. Here it was a bit of resistance. So on the monthly chart, this pink line, the level of 1391 for a Amata stock, is still okay, a key level on a monthly chart. Okay, it makes sense. The next verification that we do. So the oversold condition, the oversold CCI, is taking place at the key levels. All right. It's not too bad. The next verification that we do is that we want to check: is there a better resistance level? What is there a better support level, okay? So because it's oversold, we are looking at support level, key levels, okay? Is there a better key levels? So we do that like here on the weekly chart, now I'm on the monthly chart. We can see that below the level of 1391, there is another level here, okay? See the price found a resistance, found a support here, found a support here, found a support here, found a support here. I will call out that key level into red. That's quite a big gap between the level of 1391 and the level of 1059. 1059 is a key level. We can also say that there's another key level here. If you pay attention here, you see the price consolidate between the pink line and my new line here. So we can watch these levels. 1227 is one support level below the 1391. And after the 1227, which is the new line that I draw here, we have another level, 1059, okay? So in this scenario, if the price does not find a support here, where it is now, where it is oversold down, the next support level is 1227. And after that is 1059. So again, as we have many key levels here, we want to now, okay, identify the best support level. In my view, all right, in my view, the best support level is this one here, the red one here, 1059. So there is a little bit of risk in this trend. So we need to use what we call a top-down trading method to control the risk, the setup, the signal, and the low-risk entry point on different time frames. So a better support level is 1059. Above that, we have 1227. So we will say that, okay, we can give priority to bullish signal if the price finds support above 1391, where it is now, because it's a key level. But we will not force it, we will not pursue it if it is below the level of 1391. We need to be careful. If it is below the level of 1391 and the final resistance, the bearish momentum will continue and the price will seek the next support level, which is at 1227. If it reaches 1227, we will again use the top-down trading method. But if the price, we will say priority to bullish signal above 1227, and if it goes below 1227, the next key level is likely to be 1059. So we go one step at a time. So we are now at 1391, but we're also aware that there are better support levels in the vicinity of 1391. All right. So we have seen an oversold CCI on a daily chart. Okay. Now we are now assessing whether is it worthy entering the trade. The next thing that you need to pay attention to. So we are on a daily chart. An oversold, okay, CCI is also indicating to us a valid support level, okay, a support level, at least a support level. But now we go to the higher time frame to see whether it's a valid support level to okay, assess the risk, okay. That's what we have done now. All right. What usually takes place at a valid support level? At a valid support level, we are likely to see bullish chart pattern. Now, my friend, I want you I want that to stick in your mind, okay? When we have a valid support level on the lower time frame, all right, we are likely to see, okay, bullish chart pattern. If we are at a resistance level and it is a valid resistance level, or people are selling there, we are likely to see bearish chart pattern. If we are, for instance, at a support level and the bullish momentum is becoming strong, the price will go in a rising channel and will start displaying higher lows and higher high. If we are at a valid resistance level and the bearish momentum is increasing, the price is likely to go in a declining channel, displaying lower lows, lower high. So we keep eyes on all this, okay? All right, so let's see how long I've been talking to you now. It's 13 minutes. I want this video to be like 20 minutes. So we are under, okay, time pressure now, okay? So on a daily chart, we can also notice, so you want to, once you look at the indicator, I want you to spend most of your time checking the price, especially if you're a new trader, okay? Keep eyes on the price, analyze the price. So on a daily chart, we have seen oversold CCI right there, but the price also has formed a double bottom pattern near our key level of 1391. Yes or no? So this is a double bottom chart pattern. Now, very often, when traders see a double bottom pattern, they say that it will definitely go down, go up. Okay, it's not always true. You want to use again a top-down trading method in any case, but this is a good sign if the price is not yet completed. Why? The double bottom chart pattern will be completed if the price breaks above the nut. Okay. What do I call nut? Okay, you see very often traders get into trouble, okay? The validation of a double bottom chart pattern, price went down, okay? Price went up a bit, okay? And then price pulled back to form, okay, a double bottom like this, okay? Your warning line is the double bottom, okay? So this is your warning line, okay? This is your warning line. So what you are saying is a priority to bullish signal, but you must apply a top-down trading method. If you don't know what is a top-down trading method, I invite you to check on Google a video that we title, What is a Top-Down Trading Method by 24 Stock Trader. What is a top-down? In fact, the correct title that I gave was What is a Multiple Time Frames Trading Method, okay, by 24 Stock Trader. What is a multiple time frame trading method by 24 Stock Trader, okay? And then you can understand what is a top-down trading method or a multiple time frame trading method. So this is your warning line. The knot, what I call the knot, is this one here. For the double bottom pattern to be validated and confirmed, the price must break above the knot and find a support above the knot. It's not sufficient that the price breaks above the knot. It must break above the knot and find a support above the knot. That will form the first higher low above the double bottom pattern. This is a high probability trade setup. A higher low above, okay, a double bottom pattern is a high probability trade setup, okay? So like this as it is now, that this double bottom pattern is not yet formed. It's been formed. The price dip below it, you see that it's no more a double bottom pattern. But when traders are looking at it like this, they say it's a double bottom pattern. But to control the risk, one must use a top-down trading method. It makes sense? So here, right now, our warning line is this one here on the daily chart. Okay? All right? And the knot is this one here. Now, I have not said that one cannot buy straight away at this low here. But if one is buying here, one must use a top-down trading method. So if the signal fell, you will come out straight away. Okay, you will come out straight away because it's still risky here. Though this is a nice place to buy, but it is still a bit risky. One must use a top-down trading method to control the risk. If the signal fell, you are out. Okay? So here, this double bottom pattern is not yet completed. The knot is this one here. Okay, let's remove some of our line, and I want to go now to the yearly chart because I can see the yearly chart. Okay, why not go there and look at it? Okay, if you have a monthly chart, yeah, push it there and go and check it also. If you have a weekly chart, look at it. Don't be afraid. It's not because the trading setup is on the daily chart that you should stop on the daily chart. The daily chart is not the end of the whole picture, okay? So because I have a yearly chart, okay, at least look on weekly chart, okay? Weekly chart, at least. If you have monthly chart, check weekly and monthly chart, at least, okay? But because I have a yearly chart, I want to check it again, okay? So on a yearly chart, what do you see? The price went up, pulled back, then it went up a bit, pulled back. Anytime, my friend, you go to the yearly chart, if you have a yearly chart, what are the key levels that we watch? The high, the low, and the median line. So you see, this is the new year 2015. We must check the previous years. Where is the price now in comparison to the high, the low, and the median line of last year? These are the verifications that we do on the yearly chart. Right now, the price is below the low of last year. It is bearish. So price was going down, you see, beginning of the year, all the way down. But a key support level, which is the low of last year, the price did not find a support right there, which is in the zone or the low of last year. 2014 was at 1640. It did not find a support. So it is bearish. So because the price did not find a support at the low of last year, what is the next support level? You see, these are few verifications that you do. What is the nearest key support level? It's the pink line. So it failed to find a support at the low of last year. The next key support level is this level here, which is almost equal to the opening price of 2011. okay, 1415. Call it 1395, which is the pink line here. It's somewhere here, you see, 1391. Okay, so this level of 1391 on the yearly chart is a key level. It's almost equal to the closing price of 2009. Is also almost equal to the closing price of 2010. So you see, so we watch the high, the low, and the median line, but you can also pay attention to the opening price and the closing price on the yearly chart. These are key levels that professionals are watching. So we are very close to a key level for Amat. I'm happy with what I see here, but do not forget, the price is below the low of last year. It's still bearish. So for traders that want to push it a bit further, okay, if you want to be smarter, if the price dip below the low of last year, the professionals say that this is bearish, they want to sell, okay? Now, the next verification that we can do is to go to Google Finance, okay? So you may say to me, George, it's getting a bit too much now. Should I have to do all this? Okay, if you are a new trader like I was before, and I was very lazy myself, okay? You may, okay? Do what you can do, but just know that this is the correct way to do it, okay? All right? So, sometimes you say something to traders may get very, very upset with you or mark the video down, but sometimes it makes sense to traders because of their maturity, okay? Traders are moving up. Okay, you mark a video down, you get upset, you say, why can you say that? Okay, how can you say that? Okay, why are you talking like this? Okay, but sometimes you may get upset today, but tomorrow it may make sense to you. You may say, okay, what this guy is talking about, it makes sense. So when we come to Google Finance, we'll put the APIC of Amat is AMAT. So you see here, apply material, it's listed on the NASDAQ 100. We click on it, and we can go on and check the financials, okay, and perform what I call a Google Finance assist test, okay. There is a video that I recorded also at 24 Stock Trader, our new YouTube channel. I'm looking for the title that I gave to that video, and I want to recommend that video to traders so they may go and check it out. That may help you to understand how we use Google Finance. Okay, so bear with me as I'm looking for that video. It's like a stock trader. Okay, I'm still here. I'm looking for that video. Otherwise, I'll put in the description area. So check the description area. I will put it there. Okay. If I forgot to put it there, you may put a comment there to ask me to put it back there. Okay. Now I couldn't see the video. It's something like a stock trader is performing a thorough technical analysis, something along that line. But I will find it, and I'll put it in the comment section so traders may check it out. If you don't know how to use Google Finance, because I don't want the video to be too long, I will not go deeper. But if you go quickly to the financial, okay, we compare for the Google Finance Assist test. We'll perform, we'll check the current asset. We'll compare the current asset, okay, to the current liabilities, okay. All right, we check the annual data, and and we check the balance sheet. It's a balance sheet, annual data, and we compare the current asset, the total current asset. As you can see, is it going up? As you can see, it's going up nicely here. Total current asset is going up nicely, and we compare it to the total current liability. We want the current total liability to be going down. Okay, it's going down, then it went up again. It's not going down as such, okay, but the current asset is going up, okay. But these are few things that we do. I'll put a video in the comment section so you can also check it out. If I forget, please remind me so I can put it back there for you, okay. So You see now, so these are the verifications that we do. We see an oversold CCI. We perform the validation of the trading setup, making sure that oversold is a bullish trade setup. We want oversold to take place at a valid support level. We access the support level. We want to know whether there are other support levels below that support level, because if the price is going down, the price is looking for a better support level. So right now the price is at 1391. The next support level is 1227, and the last support level, the best support level, is 1059. The price also right now at 78% Fibonacci retracement level on the weekly chart. Okay? All right. So we check also Google Finance, perform a fundamental analysis, okay, to validate what is happening. You go to Google Finance, you will also click on the news. What are the news that are released? And sometimes the news will tell you straight away that stay away from the stock. Okay. All right, you see here, apply material, stock fall after pricing, blah, 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 okay? And all these things, you check them out quickly, read them, okay, and see what you can get out of it, okay? All right, okay? So now we have done the validation of the trading setup. The next step now, because our trading setup is on a daily chart, ladies and gentlemen, this is a free trading education on YouTube, okay, showing traders how one can trade oversold CCI indicator like a professional trader, okay. So this is our trading setup, okay. Now let's check what we call the trading signal. There's a big difference between a trading signal and a trading setup. So as I explained to trader, what is a multiple time frame trading method at 2-4 stock trader? Check that video out, okay. And we combine the daily chart, the hourly chart, and the 10-minute chart. So the daily chart for the trading setup, the hourly chart for the signal, and okay, the 10-minute chart for the entry point. Okay, so we go to the hourly chart. Remember, the biggest trading mistake is what? The violation of the market pattern. What is the current market pattern? It's a declining channel. You see, on the signal time frame, we see a declining channel. The price in a declining channel. Even on the daily chart, the price in a declining channel. On the weekly chart, the price in a declining channel. On the monthly chart, the price is still in a declining channel. So, in that scenario, okay, any bullish trade like this one, oversold, is risky because the price is not in a rising channel on a trading setup time frame, on the signal time frame, so it's a little bit risky. It doesn't matter how beautiful or gorgeous, okay, the oversold is, if the market pattern is bearish, it's risky. Did you get that? You see the channel? Okay. I draw it on the daily chart, okay? I will show you quickly how I did that, okay? I went over my 20 minutes, I believe so. You know now, we are now 27 minutes. My apologies to traders. So we want to cover everything so traders may understand it. So I hope you like this video, all right? So let's continue with our discussion. Okay, something is happening here. Okay. I'll come back to you in a minute, please. I'll come back to you in a minute. Okay, I want to show traders how I draw my channel. You can see I select on the daily chart. You see, on the daily chart, I select this point and this point. And with that 2 points, I draw my first line here. Okay, then I select just 1 point here. Okay, then I select that just this point here. And I draw a line that is parallel to the top one. So with this point and this point, I draw my first line, and I select this low here, and I draw a line that is parallel to my first line. Then I draw the median line, which is the middle line of my channel. Okay, so on a daily chart, though we have an oversold CCI, okay, the price, okay, is still in a declining channel. So this oversold is not taking place in a rising channel. Therefore, it's a risky oversold CCI. Though it's at a support level, we must, okay, pay attention to, okay, the price itself, the number one indicator, okay? Now, there were some changes to my chart because my screen was frozen. So I have to put back again my CCI indicator, period 14, okay? Apology to traders, okay? So I prefer my CCI to be in red color That's how I like it all the time. So this is my CCI period 14. Because my screen was frozen, I have to refresh the computer. So here we are on a daily chart, okay? All right, so you see now? So we are in a declining channel, but we have oversold. We need to be careful, okay? Now, talking about the signal, we go to the hourly chart. On the hourly chart, we don't want to violate the market pattern. It is still, okay, in a declining channel, okay? On the hourly chart. The hourly chart is the signal time frame for the daily chart. So, on the hourly chart, we still see our double bottom pattern. So, the best scenario, my friend, we will prefer the price. If you're going to have a signal, the signal will be something like this, price breaking out of this rising, this declining channel on the hourly chart, and then price pulling back to retest the channel, and then finding a support on the edge of the channel. That will be a signal for us. Break a ball, retest, and turn around. That will form a signal for us. But the signal is not yet the entry. Or the price breaks above the channel, which means the bearish momentum is diminishing, and the price, okay, after breaking above the channel, the price pull back, okay, beautifully, and find a support above, okay, the knot right here. Breaks above the knot and pull back, okay, and prefer the top of the knot like this. Okay, that will consider, that will become our signal. Break above, retest, and turn around. Start turning around here. Okay, that will form our signal. Okay. The price now in a declining channel on the hourly chart. If we are buying here, we'll use a top-down trading method again. So the hourly chart will combine hourly chart, 50-minute chart, 5-minute chart, or hourly chart, 10-minute time, 5-minute time frame. If you want to enter now on the daily chart, we can do that. Okay. All right. But the signal is not yet ready. Okay. I'm not saying that this is the only way people can identify a trading signal. One can also use candlestick patterns as a signal on the hourly chart. But this is the best signal. The market pattern has changed, a price forming a higher low after a lower low. It's telling us that the bearish momentum is diminishing on the signal time frame, which is the hourly chart. If you have any question, put it in the comment section. You have a suggestion, put it in the comment section, all right? After we receive the signal, suppose the price did exactly what we expected, break the ball and retest it here, and we see one candlestick up here, somewhere here, going up, back up here. Suppose we have a doji followed by a bullish candle here, exactly here, okay? Now, after we receive the signal, we'll go now to the 10-minute time frame. If you're on a 10-minute time frame, we'll repeat the same process that we have done on the signal time frame. Break a ball, retest, turn around by not violating the market pattern. So on the 10-minute time frame now, as we are now, okay, what's happening here? See, the price is in it here. So on the 10-minute time frame, the price is out of the bearish channel. So this is our bearish channel on the 10-minute time frame. Now it's trying to retest it here, okay? But remember that we have not yet received, okay, a trading signal on the hourly chart. Sometime, my friend, sometime. Traders that have more experience, okay, will go directly from the setup time frame to the entry time frame. So I'm not saying that one cannot go from the daily chart directly to the 10-minute time frame. In that case, you are day trading and you want to monitor what's happening. So for instance here, the price is out of this channel and pull back and then it form a beautiful higher low here and start going up. If one decided to buy straight away like this is for day trading purposes. One is concentrating on the short-term trend. Okay, this is just a speculation. But for somebody who is swing trading, combining a daily chart, hourly chart, 10-minute time frame, one must wait for the signal. In fact, the best day trading, okay, signal will always follow the same process. daily chart, hourly chart, signal, and then entry on a 10-minute time frame or lower time frame. It makes sense? So this is about, a day pro trader explains oversold a CCI indicator. We don't want the video to be too long. As you can see, once we have identified the trading setup, which is the oversold CCI period 14, we are now going to the next step, which is the validation of the trading setup. We go to the weekly chart, monthly chart, quarterly chart, yearly chart, a higher time frame to validate the trading setup. We are looking for support level, key support levels, to see whether the price is at a support level. The best oversold will take place at a reliable support level. So we go to the weekly chart, monthly chart, yearly chart, as I did here to show you that, Once we see that the price at the key level, we want to ascertain that is there better support level, are there other better support level. You see the level that we have highlighted on the weekly charts, There are other support level below the level of 1391, So if you are giving priority to bullish signal above 1391, the price dip below 1391, we don't want to force it. If we break below it, we test in the final resistance, we will sell instead. You see that on the weekly chart, the price is still in a declining channel. So we need to be very careful and use the top-down trade method. Once we validate the trading setup, we go to the signal time frame, the hourly chart. We want break above the bearish trend line, retesting the bearish trend line, or break above the bearish trend line, the bearish channel, and then forming the first higher low on the hourly chart. A bullish pattern, on the signal time frame is a signal. Now we will go to the 10-minute time frame. We will apply the same method that we have done on the signal time frame, the daily chart, breakable, retest, turn around on the entry time frame to pinpoint the best place and the best time one can enter the trade. Another thing that traders also do to validate a trading setup. So we see the oversold. I need to talk about this very quickly. We see the oversold on the daily chart. We can go directly to the monthly chart. So the oversold happened on the weekly chart, especially for swing traders. We go to the monthly chart to see whether we have a bullish candlestick pattern. For instance, we see a doji followed by a bullish candle. That's a bullish candlestick pattern. A doji plus a bullish candle on the monthly chart. The pattern must be completed on the monthly chart. That's We can also use the candlestick pattern to validate a trading setup. By looking at the candlestick pattern on the monthly chart, this is not yet bullish candlestick pattern. In fact, this is the month of September 2015, is not yet completed because today is the 25th of September 2015, it's not yet completed, but we haven't seen any bullish candlestick pattern yet. We have a doji, you see the tail of this candle, but as the price is continuing to go down still, There are more to this, so we can use a candlestick pattern to validate a trading setup. We can use a candlestick pattern on a higher time frame to validate the oversold commodity channel index indicator trading setup. This is the end of this video, my friend. If you like this video, please give us the thumbs up. If you dislike it, please give us the thumbs down. If you love this video, feel free to share it on Google+, on Twitter, and also on Facebook. If you love our videos, feel free to subscribe to our channels. I hope you have learned something from this video, and will put into use, to make excellent day trading, swing trading decision using, the commodity channels index indicator. We are the TS CCI Pro Traders talking about a day pro trader explain the oversold CCI indicator. Until the next time, enjoy yourself and be very happy. Speak to you soon.